Hello everyone, my name is Mojis. You're watching a Bitcoin Bubble news channel. First, we'll talk about Bitcoin. Then, we'll talk about gold and some other goods. I believe we will also look at Cardano on the daily chart today. But guys, take a look at this. We now know that this amount of resistance exists. We were kind of here yesterday, but you can see that Bitcoin is pulling through, right? It's having a little trouble here. Of course, that's fine. That is good for you. At the same time, Fidelity's FBT is getting close to 200,000 BTC and Grayscale's GBTC has 285,650 BTC left after withdrawals. These changing flows of money in and out of ETFs show how BlackRock is the market leader and how the ETF scene is changing. Andrew Tate's risky moves in the crypto space have caused a lot of discussion and shown how influential he is. Tate burned more than 587 million Solana maincoin tokens, which made the price of the top G coin go up and made a threat to break the Solana network. Because of what he did, the price of top G went up a lot, and the burned tokens are now worth $38.77 million. Different people have different ideas about Tate's power, but his deeds show that he can change the market. Tate plans to do the same thing to Solana, burning a token to get his fans to get more involved. His risky moves in the crypto space continue to cause debate and show how much power he has. You follow the plan. On this chart, we are now seeing some small resistance, but the bulls are still in charge. So what would make the bears take charge? I've already shown you this a few times, but any daily close in this area below this downward sloping channel would break the bullish pattern. This would then give the bears power for a possible drop here. But right now there is another bullish pattern, a beautiful channel breakout, stabilization, and a move up. The next goal is to break this level, which would take it to $74,000. Okay, I promised we'd talk about Cardano next. It looks like Cardano is having a good day today. I'm pleased. Is it getting worse? No, the answer is not yet. We still want to keep an eye on it though. In a fair world, this is what would be called a negative flag pattern, right? This is where we keep our flagpole and all this stuff. But that doesn't mean bear shapes can't fail, right? See this pivot top to pivot top. For it to fail, the price of Cardano needs to go above that level, which is about $0.50. If it can get through that, the energy will start to build and go up. Still, you can't say that for sure yet. Don't forget that the numbers are in charge. No one is in charge here, not you, not me, not you. And it's below right now, so it's just continuing to chop sideways, and until we see proof otherwise, we'll just think that's how the charts stay set. Okay, so a breakdown would be below this and a breakout would be above that. Anything in this range is really just choppy, though Cardano's move today is pretty strong. Let's look at gold next. Gold was very interesting. Gold was already going down before the jobs report this morning. It got so bad that I thought, wow, does someone know something about commodities that basically tells us something? We can draw this line and this line here because we got this close yesterday. In what way does that look like a flag? That's a bad sign. Even though we closed above it, it didn't catch this rising line again. That is why you wouldn't call it positive. And I had a lot of doubts about it yesterday. I'm in charge of smart money commodities and I was talking about this in the commodity service. Is this a bull trap? And bull traps are where they try to get bulls to come in before they flush them out, right? It looks like that might be what it is right now. We'll see where it ends, but I'm still keeping an eye on it here. This bottom line of the trend right here, guys, I'm going to watch that line, a close every day below this. And I think we end up going down here in the end. But to be fair, there will be a level here at about 2280. But right now, if we can close below that bear flag, things should start to go down. Now, I still think gold will go up a lot in the middle to long run. The chart is still the chart though. Again, it doesn't matter if you're positive or bearish, the chart is the chart. And that is that if you look at a textbook, the trend is currently bearish. That's a short time. Don't forget that this kind of basic analysis isn't meant to tell you where Bitcoin or gold will be in, a year from now. It's meant to tell you where they'll be in a week to a month from now. Also, that would be that move down right now. This is the SP 500 before the market opens. We can see that the number of jobs has gone down. I do want to talk to you about the job numbers right now. To put it simply, the number was very high. We had a number that said 272,000 jobs were made. The only number that was expected was 182,000. That's 90,000 more jobs than this number. This looks really hot now. And most people in the markets at first think, holy cow, this is terrible. It's good for the economy, but you shouldn't want rate cuts, right? A little more research shows that it's not quite as clear-cut and bad for the business as that makes it seem. In this case, I mean that first, the jobless rate went up. So the jobless rate went up to 4%. That's 4.0%. People had thought it would be 3.9%. And that kind of cools down this hot number, which is that unemployment went up. So why would the jobless rate go up? It looks like more people are joining the workforce. A lot of people are probably having a hard time because of inflation. They may have quit their job early or just said, hey, I've saved enough money, I'm going to take some time off. That nest egg is being eaten away by inflation. They are telling us that we need to return to the job market and begin looking for work. That's the only thing that can make this number go up, even if it stays high, right? That's important to know. Next, here's another important piece of information that makes me wonder if this really is the big market drop that some people think it is. I don't believe it is yet. I'll explain why. 175,000 jobs were made last month, right? To divide them, we'll draw a line there. This number was changed to 165,000. In fact, they cut the number of jobs added last month by 10,000. You might think, okay, that's not a big drop. It's not. But for buyers, this makes them think, wait, what if they change this number? How many times have we seen them change it down? Then this one will probably be changed down, maybe to 225, right? It's not too far off from this number if you change it to 225. Also, I'm not sure if this will happen, but I'm using what I know about psychology to figure out what people are going to say. The SP is likely to get a small boost. To be honest, we're not that far behind. Lastly, hourly wages. I'm actually worried about this one because the fact that people are starting to make more money makes the Federal Reserve's job harder. What do I mean by that? It may sound silly to say, great, people are making more money, but the Fed thinks that could cause prices to rise. You mean that the average hourly wage went up by 0.4%, right? It was thought that the rise would be only 0.3%. That means hourly wages are going up. Once more, that means people have more cash. Following the change in what inflation means, when people have more money, they spend it.